We
All
are
right, welcome
live.
everybody. Yeah, we are live.
No
Skip
intro.
right-
No
skip
intro.
right through the intro.
There we go.
Didn't even shave my head to try to look like Justin Bogard. But we are back for another month's edition of the Be the Bank broadcast. We're talking all things real estate, mortgage note, private lending, seller financing, all kinds of stuff. Mostly the residential real estate investing. I thought what we would do for this month to start off, because there are only 4 of us, sometimes we've got 5 or 6 people, but I thought we could start off with a little bit of an individual intro for each person. If you could just give a little bit of background and then kind of what your company does. We're not trying to pitch anybody here, but just how is your business different from the other guys on this screen? And what are you focused on? Because I think sometimes people might tune in and have no idea who we are. Jay, why don't you go first?
Well, I'm still trying to figure out who Chris is. Which bucket, which hat he wears. So
I thought you were going to say figure out who you are, but
no,
you're trying to find yourself.
There you go. Still trying to figure out who I am. So no, I'm Jay Redding. I'm based out of Fort Wayne, Indiana. We have a portfolio of 38 rentals, all right, and they're all locally within 30 minutes of our office. I've been doing real estate, did my first deal in 2004, went full-time in 2007. I've done fix and flips. We've done over 100 fix and flips, haven't done anything for 3 years now. Kind of done with that game. Bought a number of tax liens over the years. Those went really well. I purchased the bulk of my rental portfolios through 2008 through 2015, 16 in that ballpark. Got involved in 2019 with mortgage notes, and our focus, we used to self-manage. We are moving all of the real estate gradually over to property management here locally as turnovers take place, so it's easy just to get that off the plate. My son-in-law and I worked together. He came on board in 2014, and our focus is really working with house buyers who are selling on seller financing, helping them to create better notes, and then giving them a way in which to recapitalize by us coming in and buying a partial and get them out of the deal so they are able to recapitalize, but yet they still have the tail end of the deal, which could be as many as 160 payments yet on the back end, something like that. And then we utilize private capital, all right, in which then we pledge our legal rights, then technically term is hypothecation, as the collateral for the loan that we take out from our private lenders. So that's kind of the nature of what our note business is.
Sounds great. You've definitely done a lot and still doing a lot.
Doing a lot, yeah.
Although you do find time for what, 5 or 6 long vacations every year?
Yeah, we've got 2 in. What?
A month, 5 a month.
A month or by the month, yeah, vacation by the month. Well, you know, that is the one great thing about notes. As long as you got internet connection and a computer, you could do it just about from anywhere.
That is true.
Last week.
Yeah.
What were you going to say, Dan? Why don't you go ahead, Dan?
Oh, sure. Yeah. So I'm Dan Deppen. So I'm the owner of the Underwriter. So primarily what I do is help investors originate seller finance notes. We help underwrite the borrower, do all the compliance stuff associated with owner occupied loans. And then I've also got another business where I buy existing mortgages. So I own about between 55 and 60 or so mortgage notes and manage that portfolio as well.
Perfect. And your background prior to real estate investing?
Oh, yeah. So I'm kind of on my 3rd career. So I started my career as a mechanical engineer in the aerospace industry, doing space stuff. I did that for about 10 years, then went to business school, did my MBA, and then worked as a product manager in high tech for Oracle and AWS and some startup stuff. And then along the way, picked up real estate, but the last couple of years been doing the real estate stuff full time.
Nice. All right.
Well, my previous life was I was a drug dealer. I sold no,
Pharmacist?
pharmaceutical. I was in pharmaceutical sales for 17 years, so I sold drugs legally.
You buried the lead there, Jay. That's clickbait. We could have.
Yeah, there you go.
But
Buying
Chris.
notes from a drug dealer.
There you go.
Chris
Chris,
Seveney.
go ahead.
Yes. Chris Seveney with Seveney Investments. My career started, I've been in real estate for almost 30 years. I've been a note investor for 3,428 days since I bought my first note, first notes. So
I saw you doing some calculations over there.
I was doing how many days it's been since I bought my first note. So almost 10 years since I bought my first note. We run a real estate fund open to accredited and non-accredited investors. Our portfolio has 100 plus assets in it and about 60 million AUM. And we've got a team, it's just not me, it's a team of 12 of us that kind of lead the charge in regards to managing and growing our portfolio.
Nice. You've done for working for other people and yourself, you've done commercial, residential, all kinds of different things, right?
I've done everything. So commercial, residential, new construction, renovation. I've done courthouses, government buildings, MRI suites, which are really cool, putting the MRI machines and building all the lead stuff that goes around them. Mostly my career had been residential, multifamily, until I started more diving into the note space, which is now, of course, what we primarily focus on is first position, single family loans.
Nice. You also do some lending as well. Maybe we'll touch on that later, origination of loans. We've got a few different topics here for tonight. I think.
Oh, no, you're going to share
What about
yourself
you?
there. Yeah. Holy cow.
Right.
We're going to let you get out of this.
I like fully immersed myself into the moderator slash, I actually forgot about that. So I run Labrador Lending, and we also have a fund called the Integrity Income Fund. I've done a few different things as well over the 50 years I've been on this earth. I did work, I was in the military. I worked for the government for a while, 14 years. Half of that was part-time. And that second 7 years, I was building my real estate. We were into residential, we were doing the Burr method residential rental properties, and I still have most of those rentals. And then I moved into notes in 2018, and really my first deal was a joint venture with Chris.
So we have you
Nightmare
to
on
blame for
Elm
all of
Street.
this.
Nightmare on Elm Street.
Literally, it was a nightmare on Elm Street.
It's literally on Elm Street, but
5-figure water bill.
We serve, as you can see on the screen, we serve the active, passive, and the hybrid investor. So for the active investor, I do some mentorship, one-on-one mentorship for people who want to learn how to build a note investing business. It doesn't have to be a full business, but for those who want to do this actively. And then we also have the passive investor. We run a 506c for accredited investors, a fund where we buy primarily first lien mortgage notes, both performing and non-performing, some seconds, some origination. And then we also do asset management for the quote unquote hybrid investor, for the person who may not want to put their money into a fund, or maybe they're not accredited and maybe they can't, or they, for some reason, don't want to invest in Chris's fund. But they want to own their own notes, but they don't have time for the day-to-day management of those notes. So we offer that service as well. Is that good, Jay?
That's good. You're a boutique servicer. There you go.
Check the box. So I think for our first topic tonight, I wanted to talk about the state of the market. I know, Chris, you've done some recent podcasts. I know you track kind of the broad picture of things, private credit and whatnot. I know we're all, since we're doing this every day, we're tracking this on some level. I know, Dan, I saw you had a recent episode with Fred and Tracy Rui about the state of the seller finance market. I think it was mostly 2025 data. I started to listen to it, haven't gotten through it yet, but and I know, Jay, you keep abreast of everything, a lot of different market conditions and factors. So Chris, why don't you go first? Just kind of overall thoughts on the market right now. We're not making any bold predictions, but what are you seeing maybe right now compared to this time last year?
Yeah, I'm seeing on the non-performing side a big influx in loans and focus in Florida and Texas, which makes sense because those areas, and you're putting together a presentation in regards to what's happened over the last 5+ years for insurance, taxes, and everything has gone up 60-70% over the last 5 years for those types of expenses, and of course income hasn't kept up in interest rates, and so what's happened is you're starting to see a big uptick in non-performing loans in those markets. It's having an impact on, I think, home values, which you're seeing in Southwest Florida, areas of Texas, starting to see some softening in those markets. And overall, I just mentioned this in the note space. What's interesting is over the last 6 to 12 months, we've been buying a lot of non-performing loans that were like a DSCR or even like a fix and flip loan that it was done and finished, and they just didn't have the time to sell. It was maturity default, and we're able to get those at really good prices and make some good money on it. And the sellers were getting good pricing, for in their minds, good pricing on it as well. But now, like, the good inventory is kind of, a lot of it's gone away. So what they've got left is kind of, the leftovers. And they're thinking on these leftovers, they can get the same price that they were getting for the other stuff. And we're telling them, like, this isn't even close to where, if we were at, 70% of payoff on something, now we're like 40% because of the property condition or the values. And I'll give an example of one property that we saw that the buyer had an appraisal of 1.4 million from late 2024, and the house next door, literally same, it's Florida, so pretty much, same exact house right next door. If you're drunk at night, you're not even sure which house you're walking into, type situation. That house next door sold for like 820, and the seller is still putting on tape, hey, borrower owes me 1.1, I think it's worth 1.4, ton of coverage on this, and we're like, yeah, you're not even close. And and they're getting, now haven't come to the realization of what's happening, because what they sold 3-4 months ago was like, okay, we're still getting decent numbers because it was still decent product, but now this other product is hitting, and we're kind of starting to see a little bit of kind of the standstill in some of the loans and stuff, or passing on stuff after we start getting more information or due diligence on it.
So. Interesting. Yeah. So you think in some ways that opportunity has passed a little bit?
Oh, no, it's gonna come back. It's just got to be a little patient, because let's be honest, I don't think anybody on this podcast, on this webinar, is sitting here going to say, oh yeah, home prices are going to start going vertical again or crazy. I think everyone's like, they're pretty much flat, softening, and it's really a market by market based situation. So
yeah, it is interesting too. Just when you were talking about, you mentioned Florida and Texas, my first thought was, one of the things I like about real estate is it is so slow. It's not like tracking changes in AI or changes in the stock market or something like that. So I feel like we've been talking about Texas and Florida for a year plus, and now we're seeing it happen, right? It's like, so not that we can predict everything, obviously, but if you're staying plugged in, you can kind of see it well in advance in a lot of cases, see what's going to happen. But Jay,
you can start seeing, kind of the canary in the coal mine type of things. You can start seeing fissures that starts taking place that you can anticipate. Yeah, this is starting to move, and how fast is the question. A 6-month movement in the real estate space is a pretty fast movement. Okay,
right. For sure.
We're clearly seeing the same thing, and we're being much more conservative as far as evaluating anything in Texas right now, as far as if we're buying any notes out of Texas, and Texas is one of the states that we buy in. making sure that we're getting BPOs, looking close at the BPOs, making sure that we have the equity spread that we want to make sure that we have, even if the market goes south a little bit. All right, we don't ever go above 70% of current valuation, and those BPOs are certainly coming back. Interestingly, I do this annually in my own portfolio as far as the rentals, just because in talking with one of my financial advisors, just looking at net worth and everything in that respect. And I just recently went through our whole rental portfolio, and granted, I just use Zillow as a rough, and it's not anyways perfect, but pretty much all those values were down from where they were a year ago. So even Zillow, in its infinite wisdom, which is not always on track, okay, they're even showing now that all of these are pretty much going downward. So there's definitely a downward trend that's taking place. I don't anticipate, unless just something really falls apart in the economy, I don't anticipate at this moment in time that there's going to be anything like 2008, all right, or anything like that. I don't see that happening, at least not at this moment. But we are certainly stress testing our portfolio and seeing what's our portfolio look like as far as if we have a 10% reduction in revenue because of NPLs that start popping up, and we're seeing a few more people that are struggling to make their on-time payments. They're not necessarily in default or anything like that, but we're seeing certainly more stress in our own portfolio as far as people struggling to pay on a timely basis. Now, we've been through that before. That's not necessarily, we've been certainly through it on the rental side before. Some people may struggle for a little bit, and then they get caught up, and it's kind of the roller coaster game that takes place a little bit. But it's definitely showing stress in the market, and it's just the cost of living. And Chris, as you said, incomes have not matched the inflation that's taken place by any means.
Absolutely. Dan, how about from your perspective, or maybe based on that podcast I referred to, or just?
So I sat down with Fred and Tracy Rui. They put together a seller finance report every year. And so what they do is they collect a lot of statistics on the number of new seller finance originations. And basically the overall levels were roughly flat for 2025, which was actually not too bad when you consider some headwinds. The overall transaction volume of real estate trading hands was down. In fact, on the traditional mortgage side of the world, there's actually been this big drop in people and brokers with mortgage licensing, because kind of since the refinance boom ran its course during COVID when interest rates went to zero, and now the market's kind of tightened up. I feel like there's kind of this at least in Colorado where I am, like a little bit of a standoff in the market where pricing has actually come down, but a lot of sellers are kind of anchored on a few years ago and they haven't quite given up yet. So you've seen kind of a decrease in transactions. The other thing that's hurt new seller finance originations is a lot of those are to I-10 borrowers. And so with all the immigration stuff going on, I've seen a drop off in people doing I-10 borrowers. So to stay
those are people legally here, but they don't have a social security number. Is that?
Yeah, they don't have a social security number, but they're here legally, and number they use to pay taxes. So if you want to pull credit on somebody, you need an SSN or an I-10. So that's been down as well. So overall, having the seller finance market be flat is probably pretty good. I would say in general, there's a greater interest amongst investors to do creative finance deals, and that level of investor activity has picked up, but the macro stuff has gone down, and it's kind of netted out. So if you look at the numbers overall, it looks flat and kind of boring, but actually if there's a lot of stuff going on, it covers in kind of both directions.
Yeah, because I think in the webinar presentation, they said it was down 3% or something like that from last year. The seller finance
very minimal.
Yeah, but still it's still a bigger number. It's
$30 billion.
$30 billion.
Yeah, it's right at $30 billion
last year. So that's still
that's way bigger than what I would say like most people realize. And the reason why it's important for viewers is like a lot of the loans that individual note investors buy historically have been, seller finance loans. I know like the financial crisis,
right,
all this like bank originated stuff that hit the market, but I feel like that was sort of a blip, overall.
So when you say investor interest is up, just to clarify, that means like a real estate investor buying a property that takes out a new loan for their project, right? Versus an owner occupant or.
Well, no, what I mean by the uptick in investor activity of seller finance. So there's a couple like basic models that people have. A lot of the people that do this stuff at scale, they're like cash buyers, home investors, franchisees, the We Buy Ugly Houses people.
Yeah.
And they'll use seller finance as an exit. So sometimes they'll like flip, or sometimes they'll fix and seller finance, or just straight seller finance. And then there's a big uptick in people converting rental properties, basically converting rental properties to loans. So for like somebody that's been doing it forever and they either want to like retire, kind of step back, and they got this portfolio they own free and clear, they can basically sell it on owner finance, keep cash flow, and then tax wise it's treated as an installment sale. Now you're also like turning it into a self-liquidating asset, into a potentially appreciating one, but like if you're in that retirement phase and you're creating 30-year loans, like who cares?
Right.
So seeing a little more of that as well.
I would dovetail on that in just a second, Dan. If you've got a portfolio of rentals, this is, in my opinion, I think this is an absolute time to review your portfolio and get rid of your dogs. Okay. I mean, seller finance them out, particularly if you've held them for 4, 5, 6 years. Which ones in your portfolio you struggle to keep filled, or they're just not producing the revenue, all right, that they once were. This is the absolute time, in my opinion, to move those off, seller finance those, take your capital gains out over time. And quite honestly, you're going to cash flow way better, about 2.5 times better than what you will as a rental by selling it out. So this is the perfect time to review your portfolio. You may not want to sell your whole portfolio, but certainly the time to get rid of the ones that aren't doing the job for you.
Yeah, like to your point, like I was helping somebody with one the other week, and they had this property, like they owned it free and clear, but they had some problems with renters, and then it was like vacant for different stretches. When you add it up, like what they made over the last few years, like after all the expenses, it was like 300. It was like it was like $200-300 a month, and it's like if you sell the property and do owner finance, you're going to be making like $1,200 plus on this thing. So yeah, the bad ones are no brainers.
Yep.
Awesome. Well, we're going to pivot a little bit. Next topic: conferences for this year. I know, Chris, you ran a conference last year. We could talk about that.
Are you doing that again?
We've declined to redo it again this year. So there's too much going on.
Well,
it's a lot of work too.
I'm going to say it is a lot. It's a lot more work than people realize.
I wasn't able to attend. I did hear it was very good.
It was very good.
Yeah, I can imagine it's not something I would want to do.
So conferences right now for I know there is the DME coming up. I think end of this month.
May 1st and 2nd. Yeah, May 1 and 2.
I'm still honestly undecided on that one. There's a few lending conferences we may look at. One that somebody recently mentioned to me that's already passed, but had a really good recommendation was, I think it's SFIG, Structured Finance. Can get a lot about what's going on in marketplaces and things along those lines. Most of us have been to like an IMN in the past, and they really don't have anything anymore on the non-performing note side. So and then of course the other the big note one is of course Eddie's Beats conference, which is usually in late October, early November, I believe, that he has down in Dallas.
That's November 6th and 7th. So there is another one, Creative Finance Summit, that's in Atlanta, Georgia. That is actually on May 1 to 3, May 1st to 3rd. That's really geared more towards real estate investors, but there's a lot of seller financing, both buying properties via seller financing, but also creative financing, but also selling on creative financing. So I actually have the opportunity to speak at that one down there. So
you're going to go to both
I am. I'm actually speaking DME on Friday, and then Kyle and I will both be there. Kyle will stay at DME, and then I'm going to fly down from Nashville down to Atlanta, Georgia, Friday night, and be Saturday and Sunday
I think
down.
it was DME last year is where I finally met both you, Jay, and Dan.
He really does exist.
Yeah, exactly. Well, you know, Chris and I worked pretty closely together for 4 years. Like 4 years before we did a podcast.
And we live like an hour apart.
Yeah, that's the thing. We live about an hour apart, 1 to 7 hours, depending on DC traffic. But we did a podcast together weekly for almost 2 years.
Yeah.
And we had never met.
I think it was in Florida. I think it was the first time we met, wasn't it? It wasn't even like a local. Was it?
I think it was also DME, actually.
DME, yeah. It was in Florida, like Tampa.
So I met all three of you guys at different DME conferences, or 2 different DME conferences. But so I did DME last year as well. I was on a couple panels, I think, but not planning on going this year, but hopefully it's a positive event. But any other conferences, Jay, that you're planning to go to besides those 2?
We'll be at Node Expo as well. So those are 3 conferences that we'll be at. So.
Nice. You guys think overall, just kind of stepping back before I ask you, Dan, overall, virtual events versus in person, where do you think there's definitely more value in going in person, or do you think?
To me, there's definitely more value in being.
I'd agree.
It kind of depends on who you are. Like if you're like brand new and you're just wanting to like get basic information, something like the Cash Flow Expo that Fred and Tracy ran a while back is great. But for like actually like finding deals, meeting people, getting to know people, like it's hard to beat the in person.
It's hard to beat. I totally agree with you. That's where you develop relationships and get to know each other. And it's like, some of the people that we do business with, that's where we've met them, is at conferences.
Right. So just meeting, for example, your insurance provider, your servicer, your title company, anything that, a lot of the vendors that most of us use are at those conferences. So it's always good to meet them, because it just goes much better, much longer.
Yeah, for sure.
Away.
Dan, anything to add on specific conferences you plan to attend or that you're aware of?
No, I mean, it's funny right now. I don't have any more on the agenda. Like I've attended DME and Node Expo the last several years. They're really good. But the thing is, those conferences are very focused on note buying. And, there's a few people at those that create notes, but it's not really my wheelhouse. Last month I attended the Squad Up conference that was here in Colorado. That was really cool event, like very focused on creative finance and business stuff and all kinds of different things. That was probably one of the best events I've ever been to. But beyond that, I don't have too much on the agenda, other than I'm going to tag along with my fiance to a couple of her work conferences, but not so much for me.
What made that event Squad Up so good? Is it just the people you met, or?
There's like 2,700 people there, and they're all just like hyper aggressive doing stuff. And it's really interesting. They also had like all their, and that's the Pace Morby conference for people who aren't familiar. And he talked a lot about a wide range of topics. And then they had like their celebrity type speakers, like Barbara Kikorian, which was pretty interesting. Some stuff like that.
She's a riot. I've seen her speak.
Yeah, she has quite a potty mouth. And some of
she does.
Like
Chris
starts
is offended by
in
that.
New York were hilarious. Like I'd never heard of this before, but she, like when she was in her 20s, she, got married. Her and her husband were running like a real estate brokerage or whatever. And he left her for her secretary, which I've never heard of.
Wow.
Yeah.
I don't know. Is that I don't want to comment.
It sounded like the Mad Men era. It was pretty interesting.
She had a good story about Trump too. That was hilarious. I don't know if you shared it at your.
No, I don't think so. I don't think she mentioned that.
Yeah. So
I'm assuming we're not sharing it here. By the way, there was a comment at 6:06, so they can tell you how good I am at monitoring these comments. But note conference, they probably know about conferences.
It's like a drug deal.
You said note brokering is like a drug deal, so that's pretty true.
That's pretty good. Yeah.
Some drug dealers are more reliable than.
That is too funny.
Other Joker drug deals where drug dealers where they try to sell you something they don't actually own. I mean,
yeah, there you go. That's the wholesale club.
Or sell you, like Chris has tried to sell you drugs you already own.
That was I still love that story of where somebody had a tape and it was my assets. So I was bidding on them, going back and forth and stuff, asking for the collateral and stuff, and basically, emailing, I think, our asset sales email and stuff, and not even realize it's the same URL and stuff. And I'm just having fun with this guy and so forth and so on. But yeah, you got to love when somebody's takes a tape of your assets and goes and brokers them. I had someone recently reach out because I had something on PaperStack, and our PaperStack username I think is Seveney, so it's pretty easy to identify.
Pretty straightforward.
Yeah, and basically like messaging us like, oh, I'll buy this note and stuff like that, and I'm like, and basically again, same thing. They had like 3 different people they were trying to broker it to or whatnot. So
I guess at no conference is Mike
Rustica.
Okay, sorry, I should know that. Mike, if you have anything to add in the comments about upcoming conferences, let us know. So the next topic, pivoting here again, I know we've talked about AI. We don't have to go too far in the weeds into this, but
good, because that's about my extent of my knowledge.
Jay knows how to spell AI.
There you go. That's about it. There you go.
But it does change so rapidly, and I find like I'm like all in, and then I'm like, this is frustrating, and focus on humans again. And but just kind of, where are you seeing the big picture with AI? But probably more importantly, how are you using AI in your business, if you are?
Let me go first because mine will be short. Okay.
Sure. Go ahead.
I have used some ChatGPT on writing the newsletter, so that we have done. Kyle has played with it a little bit on doing some of the preliminary screening of some portfolios. So he's kind of put a workflow together. We're still testing that out and everything. So that's about the extent. I'm sure you guys have gone way deeper because you all have technology background, but that's about as far as we've gotten so far.
Gotcha. Dan, how about you?
Yeah, so I've been going deeper into Claude lately. Yeah. So, I mean, what I like about it is it's really nice for like manipulating spreadsheets and stuff. So I've been doing a lot of data gathering and things like that. So like I'll pull like big lists of various things from like PropStream. And then I can set it to Claude and say, filter it in this way and aggregate stuff and tell me how many times like this person shows up and that kind of thing. And it'll just sort of do it for you. I'm also experimenting with an underwriting tool. Those tools are really good at like extracting data out of documents, pay stubs, things like that. So that's super promising. The only thing is some of that stuff is kind of computationally intensive, and all the different AI providers are very cagey about like how much resource utilization you have. So I feel like we start doing more intense stuff, you got to be like a little bit careful. So I don't quite have it down to something that I can just like turn loose on, but that's kind of part of the direction I'm going. And then my latest thing, I just got up and running last week. If people want to check it out on the calltheunderwriter.com website, there's a seller finance chatbot. So you can ask it anything about structuring a seller finance deal, going through the RMLO process, and that big caveat, like I'm still training it. So it could, take it with a tiny bit of grain of salt, but so far it looks like it's working pretty cool. Well. So kind of doing a variety of stuff.
That'll be extremely helpful for people who are new to that and don't know exactly how to work with an RMLO.
Yeah, because like I find I get a lot of like the same questions
Sure.
over and over. So like one thing I started doing this year that helped is like I have a client onboarding call once a week, so I just kind of batch those, and then the other idea behind the chatbot is like a lot of those sort of FAQ things.
FAQ things, yeah, sure.
Yeah, probably good for people who are new to seller finance as well as new to AI, because you've done some of the front end work with the AI, as well. But before Chris goes, because I know he has some things to say on this, we've been using ChatGPT for quite a while now. I know that Claude is kind of the way to go. It sounds like at least people are saying
today.
You're right.
Well,
that may change in 2 weeks.
Months from now, something that hasn't been invented.
Yeah, or maybe they're all going to merge, or who knows what. But ChatGPT is so 2025 now. Sorry about that, but I get stuck in my ways.
Like, hey, I'm on a year behind. That's pretty good for me.
But I do have other, we do a couple different regular masterminds, and seems like the smart people are using Claude these days, and so we're using it for marketing and different things. If I really make a commitment to it going forward, quite honestly, it's probably going to be through somebody else who is already who's smarter than me and is working on this. So there are 3 different people that have, I won't say pitched, but shared what they're working on with me. Not just with me, but I've been, I guess, privy to seeing what they're working on. One is really for asset management, and it's has a lot to do with servicer integration and pulling the information from this loan servicer to help you manage your assets if you're a note investor or lender. And then the other one is more on the front end when you're buying the loan. Just kind of helping organize that process of that transaction, because there's a lot going on when you're buying a note. And so that one we're starting to test out. And those are 2 people that I know quite well, and they're software guys, but they also happen to be note investors. And so, I'm not going to outdo them in that. So it's like, why not try to work with someone like that who's maybe on to something, or maybe, that leads to something else. But so those are promising. And then last week I hopped on a call with somebody who I'd never met before, and his what he's worked. All 3 of these people are using Claude, but his is more about, I guess, analyzing lots of tapes and just tons of data and making the bidding process smoother and more accurate. So I guess, I'm not sure if that's, at our level, it's like, I think that's helpful, but I don't know how many of us on this call are going through multiple tapes every week with thousands of loans on it. I don't think that's not my biggest problem. That one of the other 2 that I talked about is something I would probably jump on as far as using first. But Chris, how about you? Where do you see AI big picture, and how are you using it in your business?
Yeah, first, Jay, do you spell it A-I or A-E-Y-E? That was the first question I was going to ask. How do you spell AI?
AI, yes.
For us, it's interesting because, as you mentioned, there was OpenClaw was hot for a week, and everything is, changing so rapidly that from like an implementation standpoint, like we're using, we've kind of switched now more to Claude right now, and we've got some plans to work down the road. And it's interesting because we're a Microsoft company, and they have, of course, Copilot, but essentially now they're just using Anthropic's everything, that they just threw a bunch of money at Anthropic, which is Claude, and said, hey, great, you have an Excel plugin that is freaking awesome, by the way, and so forth. But for us, we've got, of course, the marketing and investor relations team who create FAQs and stuff that they do, and I'm not as in tune with what they're using. On the asset management side, some things we do is, for example, like you said, the servicing notes for every week, we download them from the servicers and then stick them in AI, and it's like, what are the top 3 things going on? so you don't have to read 20 pages of servicing notes.
Yeah.
Because we've got over 100 loans. Same thing with court records in regards to if there's court filings and it's a complaint, throw it in there. Give me a high level summary of what's going on with this. Again, if we're getting information, we still go through when we're getting due diligence, like all the servicing notes and everything, but we also put them in to that system as well to say, okay, what's going on with this borrower type situation? Are they communicative? Are they not? Like, what's going on? Because sometimes you may miss something within the notes because you get this Excel spreadsheet with 3,000 rows. Another is we're taking the final loan data and the tape and comparing them. Tell me what's different. Did the UPB go down? Did the next due date go down? So it's, if you're buying 20 assets, you just drop them both in there and tell me if any of this has changed. So you don't have to go back and forth. And then if it has, hey, your next due date changed, what's going on? The last thing that we're working on right now is we're taking so within our current fund, I think we've been through like 250 loans, and 170 of them or whatnot have come, bought, sold, done, closed. So what we're doing is now aggregating a lot of that data because we have in our finance and accounting system, and then having it within our asset management side, taking both that data to understand timelines and costs. How much is it really costing us to foreclose in this state? Is this attorney doing better than this other attorney? How long is it taking? What has been the holdups? Kind of understanding, because we might say, okay, it's going to take us 15 months to foreclose in Florida. Is it really taking on non-contested? Is it really taking us 15? Is it taking us 13? Taking 17? What is that starting to look like? And if you only have 1 or 2 assets, of course, that's more challenging. But if you've got 20, 30 assets, in that state that you've done business in, you can start to at least throw out the the wide variations and stuff, standard deviation, and it's like, okay, where's this thing playing into? So that's the next project that we have kind of on our books. We just started Q2. That's kind of what we're working on in Q2 right now.
Well, that really helps you then as far as your planning whenever you're buying the NPLs, what you've got to set aside then.
Yeah.
All right.
Timelines and how much is it costing, and because a lot of sellers also will look at, I'll just take Florida. They can look at it, and a lot of these sellers haven't started foreclosure or sent a demand, and some of them have filed the complaint or halfway through, and they're probably selling it for the same thing. They're not taking
taking that into consideration.
Hey, look, we've got a 6-month head start on this one. So there's key things that we can look at and analyze as part of that process to review and come into play.
Yeah, you mentioned creating a summary too before. Then I found it ChatGPT and we've used Gemini some because we do use Google, but just super helpful in two ways with regard to creating a summary of historical data. One is when you're teeing up. I know Mike, he had to jump off, but he mentioned attorney management. That's what made me think of this. We have one case where we're having to pursue a couple of different legal actions. It's pretty involved. And it was just, I threw these emails and everything into ChatGPT and had it spit out a summary for the attorney. And it's like, here's everything that's gone on with it. This is a high level. You don't need all the details right now, but this is a summary of what's occurred. And then it costs less for rather than having your attorney review all these emails.
So one of the things I'll add as well is if you want to create like SOPs on something, I'll tell you, and again, we'll talk ChatGPT, Claude will like create a Word document that's like formatted correctly, which ChatGPT doesn't do great at last time I used it. And you can actually download the Word document, put on track changes, and track the changes and then give it back to them, and it will read your track changes, and it'll make changes to your document and track changes as well on there, like it's someone else reviewing it. So if anything like Word documents and stuff or SOPs, I would tell people that Claude is far superior because it comes out in a nicely formatted document.
I guess there's something with skills and Claude. I don't, Dan, you probably
I
know.
haven't gotten that far.
Haven't
We've got
gotten that
Delaney
far.
from my side is like deep into that, and we've got crazy stuff we're working on.
We've also used it for, so we still use Podio for asset management because it's been good enough. And but we can copy and paste all of our internal team comments, because we do a lot of comments, just for per asset, and just copy and paste and throw that in there. And we created something where it spits out, it's like a 4 to 6 bullet story for each note. And that can be used in multiple ways. One is to create case studies for marketing. And two is just, you forget what the deal is with each loan. I know, Dan, you mentioned having currently 55 to 60 notes. That's a lot to remember, so it's like, sometimes I just want to know, well, wait, where did I buy this? What was the plan at that point in time? What's because I do get them mixed up sometimes. And now I can see, okay, this is the story. And if I want to dive into a particular part of the story, now I can. So it's been very helpful to create that story overview of.
Jamie freeze?
James froze. Well, I would think it would be really helpful as far as when you're looking at attorney management, but also from the standpoint of your communications with the borrower, seeing if the story changes from time to time. That never happens. Because that's where, we've got 52, so I'm in the same ballpark where you're at, Dan, that we're managing. And fortunately, we only got a couple that's in foreclosure. But if you're starting to get, 5, 10, 15 as you get up higher, and I can only imagine, particularly with the number that you're buying, Chris, and you're buying NPLs to start out with, okay, the ability of tracking that and the summarizing of that to keeping that all straight, that is in and of itself a huge challenge.
Right.
So
for sure. All right. Well, with our remaining time here, we got a little over 10 minutes. I just wanted to share, touch on any recent war stories. I know Chris always has some different stories about interesting things going on. So whether it's, a challenge or a success story, anything interesting in your portfolio that you've dealt with. I know, Chris, you just got back from a trip to Florida. So there might be a couple interesting things from that trip, but Chris, why don't you go first? War story.
Yeah.
Go ahead.
Before I do war stories, one thing I just want to mention about kind of market real quick that Jay mentioned, like not 2008, and I agree with him. One of the things for those in the NPL space to be cognizant of is the FHA changed their waterfall structure. And one of the things that changed as part of the FHA is they used to be able to modify loans early on when they go into default. You gotta remember, FHA is like 3% down. They changed it so there's only one mod that you can do within the first 24 months. So you're starting to see, and literally I mentioned it because I just got a $926 million non-performing pool of loans that consists of 3,019 loans, and they call them early buyouts because they defaulted within a period of time, and lenders and servicers now can't continually modify these loans or whatever they could do in the past. So you're starting to see those. Now, we won't see those immediately because those are like insured and all this other stuff, but it's just going to eventually, those will start making their way
through.
They'll work their way through or whatnot and so forth. So, and you're, seeing a big uptick in that. And I mentioned that kind of in regards to NPL and kind of war stories, like you mentioned, Jamie, diving that into the Florida. A lot of tapes I'm seeing right now are very heavy Florida and Texas, and again, with insurance and everything that's gone up in pricing in those areas. And I just came back I was looking at some assets in Cape Coral, and a few things that caught my eye were some of these were, fix and flip loans that, the pictures we had that they were, 90% complete, which, kitchen, countertops, everything's in and so forth. But, certain things like final light fixtures may not have been trimmed out, some plumbing fixtures, but the landscaping in a yard and so forth, and like there was a pool area that, they basically said was 95% complete, wasn't. And from a billing perspective, they're like, oh, there's only like $20,000 left and the property's going to be worth $450 when done. Well, the reality is the property is going to be worth $350 when done because they're going off an appraisal done a year and a half ago. Ooh. And it's not 20,000 left, it's 100,000 left. So if you think about this loan that, let's call it a $300,000 loan that had $20,000 left to it, now has and it was worth $450, that's pretty good. 320, and you got 30% equity in it. Now all of a sudden it's really a $350,000 property but needs $100,000, so it's really worth less than $250 right now, and they owe over $300. Now what are you paying for it? What you're paying is going to be very different, and the sellers just have not, again, seen from that standpoint.
So you're looking at buying for the listener viewer, you're buying the NPL, the non-performing loan, but the property value is really the limit.
The property value just completely throws it off, and so we've trying to buy some of those, but we've kind of war story is seeing a lot of stuff come across our desk that really you got to start looking at the asset values that are really coming through. We did, let's see, finally, war story I will share that's more positive. It was in Florida. After our 5th go around, we finally got a foreclosure that we got the property back because it had 5 prior foreclosures that people bid on, realauction.com or whatever, and never fulfilled or never, paid it off or whatnot. So we were literally every time getting like $10,000 or $15,000 because of the deposits that kept coming to us. But eventually it's like, okay, let's just stop screwing around. And so we filed with the court a petition to, if they don't fulfill, like it automatically would just deed back to us. And the court approved that after the 5th time around.
Wow.
They allowed that to happen. So yeah, that's a record for us, is 5 foreclosures. The other thing that we've seen recently is we've got a few judicial state, foreclosures where trying to work things out with the borrower and trying to get them served. And it's like, they're hiding and not like accepting service. And it's like, at the end of the day, it really hurts them more than anything because the clock is still ticking. The interest has started accruing. Like if there's equity in the property, it's like, try to work something out now. And, and it's unfortunate that people just, I can't explain, but just,
I've had that recently. Exactly. There's a couple different times where the borrower, we're pursuing foreclosure and the borrower requests, hold on, I want to work something out. So then the servicer will send them the financial assistance packet. In the one case, we had to, file a motion to halt the sale. And in the end, it did add, it bought her probably 2 months or 3 months, but ended up adding probably, it was $800 just in, not counting the attorney fees, but that was just like the court fees to extend the sale. So all that's recoverable. And she just sent us $16,000 and reinstated, but it's like, you could have saved yourself. That could have been a $14,000 reinstatement, if you would, because
if the borrower has equity, that's nuts. Last fall I had a conversation with the borrower and she had equity and she like legitimately understood it, but she's like, nah, I'm just going to drag this out and file a BK and do all this stuff. So
you're still going to lose in the long term.
it's
I guess it's just easier to pretend it's not a problem and just bury your head in the sand. I don't know.
Maybe just inaction is easier than something,
facing it head on.
We do have, jump in, one borrower who is actually working with us, and they basically came to us and said, hey, look, I owe you this much money. If I short sale the property, you can attach it to 3 of my other properties. I'm cool with that. I want to get this done. And kind of, and he's been like really working with us and everything. And, that's the exact opposite where he's trying to minimize costs and so forth. And we can work with him in structure things. So it's like, we're not getting bleeding every dollar out of this guy in regards to, when you work with people, they tend to be a little bit more compassionate, I guess, and caring, or I don't want to say giving, but it's easier to work something out that versus just ignoring them and letting the interest continue to accrue and basically kind of force the lender's hand.
Yeah, it's communication and then follow through.
Yep.
If you request a financial assistance packet, don't say you never got it a month later when you. It's like
when you clearly have documented that you did receive it.
Got every other email.
Yeah.
But
yeah.
Jay, any recent war stories or success stories?
Actually, success so far. We'll see if it ends up being a total success, but at least we're moving in the right direction. I have a borrower that we actually foreclosed on up in Michigan, and we're during the redemption period right now, but the borrower has reached out and wants to get things rectified, ask if we would work with them, and we gave them a list of things that they needed to do. And so far, she's been clicking off everything on the list, and we'll find out tomorrow because we have an interior inspection on the property, see if she's done everything that we have stated from our previous interior inspection that was ordered. And we'll see if she's done that. And if she's done that, and then she give us another documentation of what her income is, we'll probably rewrite the loan and pull it out of the redemption period. Is probably what we'll do. And
Nice.
So we'll see. So the ball's in her court. And I had NPL that had put the head in the sand, down in Texas. And we finally have gotten a response from that individual. So next Monday is the final date for her to respond and see if she's going to get everything caught up. She's got to bring about $12,500 to the table to get caught up. If not, then we will move directly into foreclosure then at that point.
Did she say where she had been?
Nope. Just actually, it wasn't even her; it was her daughter that actually inquired. So I don't know where the money is going to come from, but
well, that's what
care.
I was.
I don't care.
I was very surprised when we got this $16,000 reinstatement. I have no idea where it came from, but
I was puzzled by those, and I'm genuinely curious. Like, did they rob a bank? Did they borrow it?
I know it's in my bank account now.
Actually,
holding it the whole time.
Right.
So I have one more story I'll share. Sorry to steal all this.
Yeah. No,
we have a loan with a borrower that was non-performing. We bought it. And basically, it was, again, the borrower was fixing and flipping a property, and he needed more time. So we modified the loan, gave him more time. He made like he was behind because he wanted to he was either going to let it go, but if they gave him more time, he would basically, this person did not want a foreclosure on their record because of who they are. And we bought the loan, and they're like, sure. So they cut us a check for like $30-something thousand, reinstate. We extend the loan and stuff, and they call us up and say, hey, we've got these 4 other loans that we want, that are in a similar situation. Can you buy them from the seller and stuff so you can work with us, because they won't work with us. They won't return a phone call. They won't email. They can't get us a payoff. They can't get us any information. Like, can you buy them and work, and basically do the same exact thing. Like, we'll reinstate them, we'll do everything and so forth. So, so we're actually
you are looking at it?
Yeah, we're looking at them.
Interesting.
But it's just like it.
I mean, we talk about sources of notes, and that's an important thing, is where do you find notes to buy, right? Well,
you're going to find them from non-defaulted, your defaulted
apparently
borrowers.
Your borrower
don't.
Can be,
that's not one you usually find.
I've never recommended that one. So. That's pretty interesting. Guys, any final thoughts? We're about out of time now. Any final thoughts for this month? All right. Well, I think this was a good one. We covered a lot of ground. So
I think it's good discussion. I mean, the market is ever changing from month to month, and it's always an ebb and flow. And And that's why you have to keep your finger on the pulse. And, quite honestly, I mean, my final words, this helps. I mean, I think we're providing a service to anybody that's watching us, but it also helps us knowing what we're all in different parts of the country. All right.
Yeah.
As far as what's going on and what you're seeing there, it gives us a pulse of what's happening in the market on a monthly basis. And I think that's important as well.
For sure. Different parts of the country and different angles, like we talked about in the beginning of our business. All of our businesses are different. So different focuses and expertise. So I think we'll be back. I don't know the date offhand, but in early May, and Justin Bogard will be running the show. So you'll get the full intro and outro and all that. But we want to thank everybody for joining us, and we'll see you in May. Thanks all.
Take care, everyone.
May 13th. May 13th. That's the
May
date.
13th. Thanks, Jay.
Yeah, there you go. All right. Take care.